Russell, you know, stocks and squats. Uh, and particularly why I even got into the stock market is because, you know, I had my why. You know, there is so much disadvantages that are out here for like the middle and lower class that we don't have some of the information or even any of the information that's necessary for us to move forward financially, economically. So I want to say that I'm not a financial advisor. Like everything that I say is more than likely more for entertainment purposes. However, if you do find profitability in these strategies, don't feel afraid to say, hey, thank you, Jermaine, you know, all of that stuff. So this week, like, you know, in the past couple of weeks, what we mainly have done is we've gone through like a lot of orders and trying to figure out like, okay, what does this stock do? What does this stock do? What's this stock going to do? So I want to really get narrowed down on how do you take away all the noise and just focus on this type of setup, this type of strategy, and how to move forward. I don't know how this red line got here, but that doesn't matter. So these are the objectives that we're going to go through this week. We're going to go through some stock scanning, the order of operations, and supply and demand, right? And then after that, we will apply these objectives into um, earnings, like what type of earnings should be coming up, and how it could and how it can like help you, right? That's what we want. We want to be able to, you know, find a direction where we can be able to use earnings and this information to really go forward. Um, so, with that being said, uh, if you have not read Think and Grow Rich, that's another reason why I even have this group, because in the book Think and Grow Rich, they talk about a mastermind group. And having a mastermind group, I believe, is very important. Why is this red line still here? Trying to figure out what's up with this red line. But essentially, fortune gravitates to what it said in the book men. So I included women because, you know, we're both here, which is important. So men and women whose minds have been prepared to attract them, just as surely as water gravitates to the ocean. So if you think abundantly, you know, these plays will come to you in abundance. Last week there was so much to trade that I damn near gave up. I said, I can't do it all. I really can't. So, you know, I will share as much as I can, knowing that, hey, if I have a busy week, I can't trade. I need to pay attention, right? So, and having this strategy also gives you an opportunity to be stressed less, right? So when I tell you about, you know, certain technicals to pay attention to, you know, those technicals will help you move towards a direction where you can find profitability. And it's really like a handful, and it's going to seem like a lot, but it's not. But just think abundantly, and I guarantee you these this strategy would definitely work for you. So with this strategy, also we start thinking about taking in old information with new information and how to apply it right now. And doing that, we use an OODA loop. And maybe you've heard of this before, where you take outside information, you try to synthesize it with the current new information, and then you try to make a decision based off of that old and new information, trying to make a decision and then apply some type of action that goes towards it. You know, you're not just throwing money at the market and hopefully that it sticks. You want to have an operational purpose of how you want your money to move and flow, because the market is a living, breathing thing. If you don't have any type of idea or a purpose of how you want your money to move, then it's going to move exactly the way that you're channeling it, with no direction, with no purpose. So you will lose. So you want to find a reason why you're putting in your money in a particular stock on a particular day and time before you actually, put the money in. So this is probably like the biggest thing here, right? This is how we start with actually scanning, right? How do we scan for these stocks? Like, how do we even get to, finding a stock that will run, 20, 30, 50%, right? So this I scanned roughly at 2:05 today. I'm in a yoga training, right? So during this yoga training, I was in between breaks. I've been trying to, synthesize some things for everybody. But with this scanning tool, it has helped me find all these runners that I put into the WhatsApp group every day, right? And you can find it for yourself. This is not like hidden information. Well, it probably was. It is not hidden information, but at the same time, if you're not aware of it, then you're trying to figure out, well, how does he know that these stocks are running like this? So when we start with finding the type of float, right? Well, first off, we need to know what type of trading platform you're using. If you're using Robinhood, you're not going to get this type of scanner, right? But if you're using a website like FinViz or the Lion, they have a lot of them have like built-in scanners that you can like really use these type of strategies to narrow in your search, right? So this is the Thinkorswim platform from TD Ameritrade. Um, and when it says shares, it's referring to the float size. So we look at the float size, and we want to make sure that if we're looking for a stock that wants to spike, we want to float that's relatively small. And when I say relatively small, I'm thinking somewhere around 2 million, which is small, to about 80 million. Anything like over 80, really anything over 50 is not really considered a low float. But sometimes you have these stocks that does have a float at 80, and because it has a float of 80 million, it can still run. Bed Bath and Beyond was one of them. It has a float size around 60 or 70 million, pretty close to 80, and it can still run. Right, AMC, pretty close to up there. It could still run. So you have these stocks that do have that's on the higher end of the low float size that could still run. But I try to keep my focus lower than 100 million, just because when you have too many players or too many shares in available for the players to move the market a little bit more, it will kind of go in the opposite direction of what you want. And we'll go through some more of that as we talk a little bit more about these stocks. Also, volume is another very, very important key piece. So this is something that you should probably write down, right? Even if I'm saying it, you will see the video again on YouTube. Maybe this is something that you want to put down in your actual trading journal, where you are writing down like, what's the volume? If a stock is trading about 500,000, that's a good enough size, right? That's a good enough size for this type of low float, because now with this type of herd of 500,000, if you get more and more people in there and they're starting to see that this stock is going a little bit higher, then they will become interested. And then the volume size of that particular stock will definitely go, to like a million, 2 million, 3 million. And then you'll start seeing 10 million for a float size that's only 5 million, right? That happened a couple of times this week where we had a float size that was close to like 3, 4, 5 million, but it was the trading volume on the day was like 11 million, right? So those are the times where if you're in early enough when the volume is around 500,000, it can definitely move the price up higher, because now everyone, the euphoria of being in this stock is right there, right? Everyone wants to be in it. So so that's why volume is important. Also, you want something that has been trading about 5% on the day, right? It's up about 5%. Because it has that 5%, that means it's like in play. That means it's like on the court, ready, dressed, got his sneakers on. Sneakers are tied up, shorts tied up, jersey on, ready to go. And so that's why that 5% is like that key indicator. Sometimes people will use like about 3%, but 5% has always been technically a safe number for me. And I like safe, right? I'm a very safe trader. Um, and then also the bid, right? I look at the bid price. I say 15 cents because sometimes you can get an OTC stock, which is a over the counter stock, which is not on the NASDAQ or on the Dow, or on the Russell 2000. You will have these OTC stocks that are trading at 15 cents or, even a penny, and they still have the technicals behind it that it can run higher, right? And I'll show you examples of that as well. And probably one of the most quintessential, like, moving average indicators that I've been using thus far has been this 5 EMA that crosses over to 200 SMA. These two moving averages uh, help to understand the direction of where that stock is going. If it's if it's trading above the 200 simple moving average, it is now a bullish stock. If it's trading below this 200 simple moving average, it's now a bearish stock. Bullish meaning that it's going up. A bull fights up with its horns going up, and then a bearish stock means going down with the bear fights down with his hoofs, his claws going downward. So, we use that 200 SMA as a reference point to see which direction it could go. And this is strategy for both, right? If you wanted to buy below the 200 SMA and want to ride on up, there's a strategy for that. If you want to buy or short sell above the 200 SMA, thinking it's going to come down, there's a strategy for that. Always say back test and back test and back test. And then also with this scanner, you see that there's a whole list of stocks. There's 108. This was all from Friday. And we'll have a chance to go through all of not all of them, but go through some, especially like EYES, because that was one that popped up. AMTX was another one that I was in. I wish I took all the profits just because I'm too safe of a trader, but you will see why, I tend to sell a little bit too early. Which is fine. As long as you take gains, I don't think there's anything wrong with taking profits. Take your profits, most importantly. So there's an order of operations with everything. Everything has order of operations. Your trading should not be far excluded from these order of operations, right? McDonald's, Burger King, Taco Bell, Pizza Hut. I am licensed, registered food inspector at FDA, New York City. Like there's an order of operations. So when these restaurants are preparing their food, there's a system that they go through prior to giving it to the customer. You should also approach your trading the same way. If you're looking at trading, if you're looking at trading a stock and you are just throwing money at the stock, then you're going to have a hard time because you have no real order of operations. And at the same time, you don't know if you're buying at a high point. You could be buying at the top. And because you're buying at the top, it's going to come straight on down, right? And because that's what happens when a stock goes overbought. So let's just go through some of this order of operations real quick, right? So we talked about the 5% on the day, right? 5%, that means a stock is in play. Time of day is very, very, very key, right? So if the stock went 5% on the day and the time of day is like 9:30, 9:45, that's where a lot of buying and selling is happening. Majority of the market activity is happening at between 9:30 and 10 a.m. Of course, there'll be some pre-market movement. Yeah, pre-market movement is always important. But, when the market opens at 9:30, you're having a lot of movement happen between 9:30 and 10 a.m. where buying and selling is heavy. Sometimes it might even slow down before it gets to 10 a.m. Right. And then at the end of the day, you're looking at 3:30 to 4 p.m. That's key critical times where a lot of buying and selling is happening. Right. Those, if you're trading at 12 noon, your risk is exponentially higher. You're gambling, right? So you want to look at the time of day as a reference. Time frame, a lot of traders look at different time frames, and I narrowed it down to really 3 time frames. Where you have the daily chart, where you get to see the whole chart, you get to see everything that the company has done from its beginning to its current time. Then you have an hourly chart where you get to see not just what it did during the day, but also what it did during the closed market hours. The closed market hours are between 4 p.m. when the market closes at 4 p.m. till 9:30 a.m. the following day. That's closed market, right? So during that time, the market can move in any way. You want to use the hour chart to assess where the price movement is going, or not going, right? And then the minute chart, you want to use the minute chart to see where it is on that time, right? On that day. If you're looking to buy in on that day, you look in on the minute chart, zero in and say, okay, well, I'll compare the price with the hour and the daily. So on the minute, I want to buy this minute at this time because this works with all the other technicals that I'm going to explain with you. So news, catalyst, sentiment. Uh, there has to be a reason why the stock is moving. Investigating why. Why is it moving? Find out what the news is. Find out, what are the SEC filings are saying. What if you have a Twitter account? Go on Twitter. Everyone on the trading floor has a Twitter account. Everybody. I've been on the New York Stock Exchange. I've been on the Nasdaq trading floor, and I've seen it. I didn't think it was true. It's very true. They all have a Twitter account. Have one. Candlestick patterns and trends. I will supply you with some like reading material, so that will be very helpful. So you can identify what a candlestick pattern looks like and how to identify trends. We talked about the volume and the float size before. Support and resistance. That gives us a chance to understand where support is really the demand, right? The demand at this price. Everyone's demanding their Nike shoes at $50. They don't want it to go any lower. There's a strong demand of $50 Nike shoes. But the resistance of that price to go past $70 is like, okay, there's a whole supply. There's a large supply of Nike shoes. And if people keep on buying the shoes at $50 and they're seeing that, hey, this demand is getting higher, it's going to get closer to that supply price, which is $70. And then, if you're at that resistance line, maybe it goes up higher, maybe it comes right back down to that support price that everyone wants Nike shoes at $50. So you'll be able to identify this on the chart for yourself. Then the moving averages, we talked about it on the screener before, where we use 3 moving averages for those time frames, for the hour, for the daily, hourly, and the minute time frames. We use a 5 EMA. You can screenshot this order of operations. I'm telling you, this is beautiful. The 5 EMA, the 20 SMA, and the 200 SMA. Anytime a stock is trading above the 5 EMA, the price will always go higher. Always, always, always go higher. That's just quintessential. That's what it does. If it doesn't go above if it goes above the 5 EMA and then starts trading below the 5 EMA, particularly on the daily chart, it's going to test the 20 SMA price and then eventually the 200 SMA price. And you will see this on the chart, right? I'm just trying to give you a little background on these technicals so you can have it, so you can summarize an idea. So when you do see it on a trading platform, you're like, okay, this is not too far-fetched. I can grasp it. The MACD, that determines your momentum, the direction, if it's going to go bullish or bearish, right? You have an indicator that can confirm, that 200 SMA price point. If a stock is trading above it or below it, you have your MACD to confirm that type of momentum. And then your RSI, you want to, with your RSI, it's a relative strength index, and it shows you if the strength of the stock is overbought, which you should never buy when a stock is overbought, or if it's oversold, right? And you should probably not sell when it's oversold. So really do the counter of this. If it's overbought, you're looking to sell at this point, right? If it's oversold, you're looking to buy at this point, right? And we'll go over that as well. The TTM squeeze, definitely another confirmation that will help you understand if a stock will go higher. We look at the 0 line, the x-axis, that tells you if the x-axis is green or red. If it's green, typically that means that there's more buying, heavy buying, going up higher. If it's red, that means there's some selling. It might be pulling back and going lower. And then with all of this combined, you can very much empower your trading of shares. But if you want to empower your options trading, there are 2 key things that you should really look at. That's the implied volatility and the theoretical price. The implied volatility lets you know that if the volatility is lower than the historical volatility, then that is a good time to start buying, right? If the theoretical price, which you'll see on the chart, all of this I'm explaining, like I said, it's going to be on the chart. The theoretical price, if it's if the theoretical price is much lower than the actual option price that is trading at, that means that you're buying at a higher price and it's too high. Theoretical price means that that's what, in theory, this is what people who are trading this option contract believe the price should be. So if the price is trading above this theoretical price, that means that you're buying it at a higher price than what the general consensus believes it should be. But if it's trading below that theoretical price, then that might be something that you should buy, right? And it might be the reverse if you're short selling. And then last but not least, most important, have an entry and exit plan. If you don't have a plan, you plan to fail. Point blank. It doesn't get any more simpler than that, right? So I know I gave you a whole order of operations, but you will see it as we go through the chart. As we go through the charts. So Wyckoff, Wyckoff method. Um, Wyckoff method is essentially this higher highs and higher lows. You have higher lows that are here, higher highs. This is all a line chart, right? It's not candlesticks like I mentioned before, but it's a line chart. And this kind of gives you an abstract idea of how prices can move. If you see higher highs being created, that means that, hey, this or the higher highs and higher lows being created, that means that the previous high can be broken and go higher. It will pull back, but once it finds support at that higher low, it's going to go higher and retest that previous high, right? Until it starts to consolidate. And then once it starts doing this consolidation, it's going to find some support and break down support, in which your lows become lower lows and your highs become higher lows. And as it goes lower and lower, it will come back to its previous support, which is where it started. But just like there's one on the upside, it's like that on the coming from the downside. So now that it came down and it was making, lower lows and higher lows, it found the ultimate support, consolidated, trading between support and resistance. Remember, $50 shoes here at support, $70 here at resistance for your Nike shoes. And then it continues to consolidate in between that support and resistance price until it breaks through, right? Making higher lows and higher highs once again. So you will see this consistently, particularly now, especially with stocks that have plummeted after, last year, this time with the coronavirus, where stocks really bounce off of its extreme lows and it's approaching the 200 SMA and it's looking to break that resistance here, right? So having an idea of the Wyckoff phases of how it works, coming from, going up, consolidating, then coming down, and then from coming down, consolidating, and then going up, very, very helpful. This gives you an idea of schematically, like how does the price action work? Because price action and volume really are the two main determining factors. Like everything else that I'm showing you, yeah, that might be great. But if you don't have price action and volume, the stock price is not going anywhere. You need that. That's quintessential. So with that being said, right, I know I gave you a whole bunch of information in the past 20, 25 minutes. So with that being said, we have to apply all of these things into earnings. So these are the stocks that are moving for this upcoming earnings, right? So we see that Monday, and I know like in the previous weeks, we've always taken something that's going to, come out with earnings on Monday, and we'll go and analyze it using the technicals that we just spoke about. And then we can go through, probably take a couple of others as well throughout the week. But also, I want to make sure that those who are on the call who have stocks that they traded during the past week, or that they had just an idea or questions about a stock that they were interested in, let's pick through those and really understand the mechanics and trying to figure out of how it could possibly move in this upcoming week. So with that being said, I know I shared a lot. So, does anyone have any questions on what I've said thus far? Please don't be shy. Oops. Yes, unmute yourself. You can unmute yourselves if you have any questions. Please feel free.
That was a lot of good information, but what you talking about, Willis?
Thank you, Donna.
Well,
I just wanted to open the floor.
my main was I understood a lot of it, but what do you mean by the 5%? It's gonna trade 5% early in the day, and that's a good sign that it will run up more or down, or it just has a lot of volatility, so you want to trade it more?
The 5%, not that you want to trade it more, but at least it's now in it's in that opportunity phase, right? It's in that phase that shows that it has some type of growth, right? So if we're looking at like the Wyckoff method, right? We see that this at the very beginning here, this could be your 5%. So with that 5%, yeah, it might pull back, but it's telling you that, hey, I'm in play now. So if you want to enter into this trade, you possibly could do that when I pull back.
Correct. And what time period are you expecting this 5% to take place?
I am expecting. So that one is kind of hard because sometimes, or most times, you'll have a stock that moves in the pre-market. And when the stock is moving exponentially in the pre-market and it's up 5%, you're like, oh, great, this is up 5%. When the market opens, it's going to go higher. And then sometimes when the market opens at 9:30, it doesn't. It pulls back. It pulls back dramatically, maybe even sharply. And then it's no longer in play. So I particularly wait for 9:45 to understand, okay, did this stock actually hold its gains after opening up? Because I think of it as like someone waking up and starting their day. When you wake up and start your day, you're not, jumping out of bed, or maybe you are, I don't know. Maybe you jump out of bed and like, yeah, hooray, a new day. And you keep that same energy, that same vibrancy throughout the whole day. No, like there's going to be a part of the day you wake up, you're like, yes, I woke up. And then you'd be like, oh, well, damn, I got to do this, X, Y, Z. I don't know. Oh, my God. Then you start questioning things. Then you start to reserve, you collect your energy to come back a little bit and then really start figuring out, okay, well, what do I have to really do? Your order of operations throughout your own day on moving forward. So I kind of look at it like that. At 9:45, that's when I'm looking to say, okay, is the stock holding its gains? Or if it's not, and if it's not, but it has like good news, but still holding that 5%, the volume is behind it, the technicals are behind it, the charts are behind it, the sentiment is behind it. And I look again around 10:30 is the next time to buy. 10:30 typically the next time to buy for a stock that has already made its move in when the market has opened, because once that pullback happens here, this is now around 10:30 where it's like, okay, well, we can make a ramp and move up all the way through to 12:30. And I consistently, I don't like buying after 10:30, or not after 10, after 11. If it's moving and it's 10:30 and I'm like, okay, it's going in the right direction, then that right direction can propel it into about 12:30, maybe 12:45, right? But once that lunchtime comes and it's overbought, I'm looking to sell it.
Okay.
Hopefully that answers the question.
Yeah, it did. Thank you.
Absolutely. Does anyone have any questions? Any more questions?
I had one more question.
Please, by all means, please.
With the moving averages, you said when it's above this moving average, then it's bullish, and if it's below this moving average, then it's bearish. But when which strategy do you use? Because if you're buying when it's above the 5 moving average, then that can work in the early beginnings. But when moving averages are wide, they always have to come back close. So it can go against you if, like you said, buying in at the top when the moving averages are there at their widest point, and they always have to come back close. So which strategy do you use?
So as I'm trying to make sure I share my screen so you can see it, so we can actually go through that. I was sharing the options chart. Sorry. So we'll go to what was traded last week. I know I mentioned, someone in the group mentioned Urban Outfitters. So let's well, I mentioned Urban Outfitters, but someone was asking about retail in the group before during the week, and Urban Outfitters was one that I mentioned 2 weeks ago, where it was going to have this exponential uptrend, right? So first and foremost, let's orient ourselves, right? We're using the OODA methodology. So right here, even I have these red lines here and stuff like that. I want you to first off look at the moving averages. This green line is the 5 exponential moving average. This teal line is the 20 simple moving average. And the red line is the 200 simple moving average. So essentially, like I said before, you want the stock to always trade, if you, especially if you're bullish, because we're going to be in a bullish market, you want the stock to always trade above the 5 EMA, right? Once the stock continues to trade above the 5 EMA, you're in a good spot. But yes, the moving averages do get wide, right? So when they do get wide, you want to make sure, first off, is it closing above the 5 EMA? If it does that, that's great. Is it a green candlestick closing above the 5 EMA? That's even better. But once it starts coming down, right, and it closes below the 5 EMA, that's when it's going to test the 20 simple moving average price, right? So this is back in November that I'm looking at. I'm not even looking at back here yet. We're not there yet. We're going to just look at the past, because the past movement can always, not 100%, but at least 80% of the time, replicate that same type of behavior, right? And we want the odds in our favor. If it can do it 80, 90% of the time, at least the odds are in our favor. If the stock price starts trading below the 20 simple moving average, then there's a chance that it can come to the 200 simple moving average. If it does not hold support at, like, here was 2450-ish roughly. So identifying previous support will be like back here in October, and even back in September, right? So you get that opportunity to really, see like, oh, okay, well, at least it held support previously. So yes, the moving averages would be wide at some point or another for a stock that did make an exponential move. But once the stock starts trading above the 200 SMA, this red line, it is typically a bullish indicator, meaning that it will have opportunity to move up higher and continue to grow higher. And this was back in August, where it crossed after its earnings. The earnings was a catalyst. That's why having earnings as a catalyst is probably one of the best ideas ever, because a stock that could be dead in the water can get some type of momentum to the upside and go, from $20 to $40 in roughly, what is that, about 6 months or so? Or 5 months. So hopefully, did that answer your question?
Yes, it did.
So like I moved the stock out a little bit wider just so we can see, and I'll let me remove these support lines, right? And depending on the trading platform that you have, maybe you have Thinkorswim, maybe you have E-Trade, maybe you have Interactive Brokers or Webull. I've seen their charts. Their charts look pretty damn good. So maybe E-Trade, if you have E-Trade Pro, actually, it's not that bad. It's really actually pretty good. But essentially, you want a chart that you can be able, or at least a platform that you can be able to see its entire history. Robinhood is not going to be able to do that. Robinhood does not give you that accessibility. So you will have to go to something like bigcharts.com in order to see that. But to further give you, more of an idea of where we are on this platform here, like I said, we just went through the moving averages. Here you'll see that there's a phone and a light bulb. That means that earnings and an earnings call is coming up. So Thinkorswim likes to help you identify that hey, earnings is coming up or a call is coming up, and it'll also show you if the stock has dividends, which is also good. Below it, I have the MACD, which we said was momentum. As you could tell, if we could do the comparison, right? We were looking back here. If we do the comparison when it first crossed the 200 SMA, the MACD was just coming above the 0 line, this x-axis. So it's showing that it was bullish, right? But also the RSI, which is the relative strength, showed that it was overbought. When this happens, you do not want to be buying here. You want this overbought to come back and be patient. This is where patience is key, because let's say back in August, you bought this because you saw that it was going to break out because of earnings, which is great, right? And then you saw that pullback. It's trading above the 5 EMA. You're like, everything is moving great. It should go higher, right? We got that red candlestick there, but we started to see that these green candlesticks are forming, right? Now we have it where this red candlestick forms even stronger. The moving average, or the moving average, the MACD starts to cross. When the MACD crosses like this, that means it's a shift in momentum, meaning that the stock price could go down. So we have to use the MACD as a confirmation of which direction the stock is going to go. And as you could tell here, when the moving averages crossed, it came down lower. Now it's trading below the 5 EMA, trading below the 20 SMA, and then it tests the 200 SMA, right? That 200 SMA price should get tested. But as you could tell with the relative strength, it's not oversold. It actually held support and is trying to show that it wants to go higher. A good indication that it would go higher that you were asking earlier, I didn't quite catch your name. I was trying to catch it when it popped up. But when you have a strong green candlestick, Tremaine, sweet. Thank you, brother. When you have a strong green candlestick like this, let's zoom that in. When you have a strong green candlestick like this might be that 5%. That could definitely be 5% right there. So you want to use that as an opportunity to say, okay, well, this is that 5% that Jermaine mentioned. Is it in play now? Well, let's look at the MACD. We see that the momentum is starting to decrease. We see these red histograms are getting smaller and smaller. That means that the selling pressure is starting to dwindle, and hopefully we'll have some type of buying, which we see that here, but you wouldn't have known that, right? You would not have seen that. Let's, as we continue to use this as an example, let's just say that we were here. Go ahead. Sorry.
So where would you find your entry point? You know, where would you take your trade throughout that process? You know, because the MACD crossed and everything like that, and with the RSI. So where do you enter the trade? Because are you a long-term trader or are you daily trade? Because you're in a daily time frame. So are you expecting to hold this for days or weeks?
So that's where I use the chart. When it starts being overbought, that's when I sell. But as far as like the entry point, we can definitely get into that on the minute chart. I know I'm not showing it to you on Urban Outfitters because I'm not currently in that position, but I could show you from a previous position that I was in with UNFI, in which that it did exactly, you know, where I got in and got out on the options contract. Let me just pull that up for you. Or actually I can pull up AMC because this is where you will see that I tend to sell sooner than I should, because I'm always risking, you know, looking at the downside risk. So where is it? This, no, this is it. Can you see this here?
Yes.
You can see the chart? All right. So this is the options call for March 19th for AMC, right? In the previous weeks, I've been trying to get these little markers to come in, and I don't know why they haven't been coming in. I don't get it. But now I think it's just a Thinkorswim reboot issue. But essentially, you see here, like around that 10, let's zoom in. because I'm on the, let's go to the daily first. I did do this as a day trade first because one, I wanted to get comfortable with AMC. Two, I wasn't sure how AMC was really going to move with the Reddit crowd. And three, I just wasn't liking this activity after lunch. So I saw this and it was like, okay, this is going to be a good options call to be in. So I think that it can go to at least $2. Like, I'm not thinking it's going to go to the moon. Maybe it was going to go to 4. I don't care about that. I said maybe it can go to $2. I missed the 250 exit. So I was like, oh, it's okay. I'll still just take my regular ass profits. Don't mind that. So as we go in on the day, on this day, this was Tuesday. I entered in here for a day trade at roughly 10:20, right? The main reason why I even entered in is because one, it's trading above the 5 EMA on this options contract, right? So the options contract is going to look slightly different than the actual stock price contract just because of its different underlining prices and stuff like that, but it's relatively going to move the same. So when I got in here around 10:20, 10:30, I said, well, it still has some upside. We have this green indecision candlestick, and all I want to do is just watch it ride up the wave until it's overbought. Once it goes overbought, I'm looking to sell because I don't know what can happen. Like maybe it can go higher, which it did, and it did that, right? But sometimes with the options contract, when the market opens, it can tank in price. So here, let me zoom in to the 2 minutes so you can really see what's going on. So I sold like around 12:14. I bought roughly about 10:16, 10:20, yeah, 10:18 actually, right? Because it started to pull back. And then as it was starting to go up, I said, oh, okay, it's going up in price. And it was consolidating sideways. You can kind of see that it's consolidating sideways. Now, this is where you will have to put in your stop loss to see if it does pull back from the price that you wanted, how much you're willing to lose. Because sometimes it will pull back on your entry price. And you say, okay, well, can I risk 2% on for 20% upside? Or do I want to risk, 5%, depending on your risk level, that's where you will know if it's good, if you want to get out or not. Because of the way that the movement of the stock was going, that it was trading, not only trading sideways where it was consolidating, but you started using the other indicators to help you confirm that it does still have some upside. So here, when I started using the RSI on the minute chart, I said, okay, well, it's consolidating and now it's overbought. What does the TTM squeeze say? Like I said, with the TTM squeeze, what it does show you is that on the x-axis, that there's a lot of buying consolidation, right? So let's say that all of this x-axis was red. If it was red, then it will give me some type of concern that there might be some selling pressure causing the price to go down lower to being oversold. Then I would say, okay, I'm only trying to risk 2% of my entry. So if I feel that it's going lower, I would more than likely put a stop loss at about $1.50 per contract. But I didn't put in the stop loss because it started to go up higher, and I kept it there. Yes. Question.
So the TTM squeeze will change colors based on if people are buying or selling?
Correct. Correct.
So the whole line will change colors or just specifically in that area?
It will change on that area during that time frame, right?
Gotcha.
So even if it's on the minute chart and it's showing a whole bunch of buying consolidation, maybe on the hour chart it's not showing that, right? Which I believe it was during this time. So if we look at the hour chart, we see that, yeah, there was exponential buying happening. I did not have to sell, right? I saw this RSI. Anytime when I see the RSI being overbought, I'm a scared trader. I don't mind that, but it's been keeping me profitable so far this year. So I'll just get out, take my profits. If it pulls back, I'll wait for it to pull back, see what price it gets, see what price it goes to, and then maybe get back in, maybe. But see, on this time frame, you see how the histogram was a lot larger, right? And if we go to the daily chart, it doesn't show it on the options contract, right? It doesn't show you any implied volatility or TTM squeeze. So that's where you will have to really use the share price, how it's trading, to see which.
Right. And on the 1 hour chart, it was going down, but the TTM squeeze was still green. Is that because it's still in an uptrend?
On the hour chart, let me go back. So sorry. You said on the hour chart, it was going
It's
down
still
here.
right. Okay, on the TTM squeeze, I don't see it. I mean, before that, I mean, okay, from the last highest point it made, it went down, and then the TTM squeeze stayed green. So I see only one red dot on the TTM squeeze.
Yeah, there was on the hour chart, at least there was not, like, literally there was probably no reason why I should have sold this, right? Because it was doing everything as far as the order of operations was concerned. It was trading above the 5 EMA throughout the whole time. The histograms for the TTM squeeze were, the bars were getting larger and larger and larger, and the volume was coming in, right? So if I was a perfect trader, I could have waited into the next day. All right. But I did not wait. This was on Tuesday. I said, I'll just take my day trading profits. That's no problem. And then, whatever it did, it went up another $1.06, $1.20 or what have you. But the TTM squeeze was definitely there to guide the direction that it could go higher, right? Even that it was overbought, it was still suggesting on the options contract that it could go higher. And if we look on the actual share price for that stock, if we look at the share, oops, sorry, is this showing? This showing? Yeah, it's showing. So if we look at the share price for the stock as well, I tend to test stuff a lot. So I was like, let me take out 3 shares. Let me see what's going on, particularly before earnings, because people kept on saying it was going to go to the moon before earnings. And I said, I doubt that. But even if we look from that Tuesday, when we look from that Tuesday when the stock price was moving, we see that it was still trading above the 5 EMA. It was still going higher, and it still needed to go higher. The TTM squeeze, even though the histograms weren't as large as they were on the options contract, it was still showing the green dots on the x-axis, and the histogram was getting larger and larger. So like I said, I really didn't have a real reason to sell, except that it was earnings was coming out prior to, and I'm not a big fan of holding through earnings. That's a rule that I have for myself. Just because I've seen earnings tank, and I've been a part of tanking earnings, and I don't want that. So that was another reason why I end up selling on that Tuesday. Which is things that you'll probably have to, like, as you're going through, your own trading methods, you're developing rules for yourself of like what time of day I should actually enter into the market. What type of stocks do I want to even trade? Like how much do you want to risk in each trade? Because not all of these stocks are always going to go up. They're going to pull back. AMC should go up higher based on what we just talked about. I probably wouldn't buy the options contract because the volatility is higher than the historical, but it still has some upside, at least on the share price. So I wouldn't be surprised if this was like a big buy coming into Monday. I would not be surprised if people really, really buy this and it tested $13 a share when the market opens.
Could you explain the implied volatility and everything, like how it works?
Absolutely. So with the implied volatility, first off, there's this book. It's called the 4 biggest mistakes options traders make. And I was just introduced to this book by Fitz, who's on this call, which I want to say happy birthday to Fitz. He is 21 years young again. So happy birthday. Appreciate you, brother.
Yo, Fitz, big up yourself. Grr.
Facts.
Big up, big man.
So the implied volatility is how volatile a stock can move in reference to the stock price, right? So when you're looking at trading any options contract, you're looking at the contracts as a whole, right? You say, this week a lot of the monthly options contract are going to expire, right? And we're still on AMC. We see that there are weekly contracts, and the ones that are beside the weekly, then there's the monthly, right? I particularly would not really buy a contract that's going to expire this week. I don't like weekly contracts because I feel like they have even more volatility. But let's say that we were looking at this monthly contract. I'm going to get into your volatility question. So what we look at is, we look at what the price and the liquidity, the actual volume of the contract. So for this March 19th call, we see that we have a lot of options that are in the money on the call side. On the put side, right, we also have this highlighted section where it's in the money. This non-highlighted section means that it's out of the money. So what happens is that when you have volatility, you'll have this gamma. This gamma determines like the underlying volatility of the price. If you have a high gamma, chances are, like Express has a high gamma. Chances are that price is going to fluctuate up and down, and probably even sideways between particular price points at a given time during the day, right? So to avoid this extra volatility, avoid buying at a high price, you want to buy the contract at a lower price. So what happens is that we wait for the implied volatility to be lower than the historical volatility. Because as you can tell, if you look, comparatively on the chart, on the actual stock price chart, you'll see when the stock price was coming and finding some support near the 200 SMA. Remember, once it crossed the 200 SMA, it became bullish now. Momentum change. It had to pull back because it was overbought. When it pulled back and across and then maintained this whole bullish sentiment, it maintained this support around 520, 530. Look at the volatility. The volatility is low. When the volatility is low like this, it gives you an opportunity to say, hey, I want to buy a contract. And I believe Fitz, he ended up buying a contract right around here when the volatility was extremely low, because he knew that if the volatility is lower than the historical, that gives you a better option contract. And you always want a better option contract. This is where you can make more money on the upside because you're not buying when the contract is higher. And, if we do it comparatively looking on the hour chart, after it crossed the 200 SMA, which was back here, so we just zoom in, it crossed the 200 SMA. After it made its new high at $25, it pulled back, like we said. But let's look at the volatility. The volatility is trading below the historical, but it still needed some time to come down. Because the historical volatility and the implied volatility were pretty high, that means that you're going to be paying for a higher option contract price over here versus waiting for it to level out and consolidate. And then once it starts doing that, then maybe you start buying a contract right around here once the stock price starts trading above the 200 SMA. I really love the hour chart because it gives you a sense where you can see the pre-market and aftermarket movement. Without the hour chart, you would not have been able to see this. You would have thought, oh, this stock is going to go up higher, but you don't see that it actually went lower, right? It went below the 200 SMA before crossing back over the 200 SMA. And that 200 SMA is key because if the moving averages don't merge with like the 5 EMA and the 20 simple moving average doesn't move with the 200 SMA, like doesn't really converge, then there's no real opportunity for a spike to happen, because we need that convergence of the moving averages to happen so that it can spike, so that it can move higher, right? If we had bought here, like, going into the close at 3 p.m. on February 22nd, we could have rode that wave up until, the February 24th, where it went overbought before coming back down, right? So that's why the moving averages are very key, especially on the hour chart. And if you use the implied volatility, it give you a better option contract. Hopefully that makes sense. Any other questions?
How would you know it was going to continue to go up? Like when they made that first, I mean, of course, it made that cross, and you anticipated going up, but it always crossbacks. But it was overbought at that point, but it didn't go back oversold. It came back and came even more overbought.
Yeah. That's the hard part. Go ahead. I'm sorry. I didn't mean to cut you off.
No, yeah, that's what I was saying on the RSI.
No, that's the hard part. Once it's overbought, that's the time that you should start looking to sell, unless sentiment says, right? AMC is part of like the Reddit stock trades, right? So for me, there's certain little behaviors like, I've learned from day traders, especially short sellers. So learning from short sellers and knowing their mentality when it comes to a lot of stocks, sometimes I'm like, okay, it's on its RSI now, I should probably get out. But because I grew from that knowledge, I have a little bit of like tweaking to do with my own trading. Like, okay, well, even though it's overbought, the sentiment still says that it has some upside. So maybe I don't have to sell. But at the same time, how if you have your emotions involved in the trade, it's going to be harder for you to determine if that overbought is truly overbought, or if it's going to pull back and then truly give you some upside. Right. So it's hard to determine to say, hey, even though it's overbought, to stay in, right? Because people, when we went through Royal Caribbean a couple of weeks ago, people were like, I bought Royal Caribbean, just like you said. And I said, okay, well, it's overbought now. So what is your plan of action? They had no plan of action. They just knew when to buy, expecting it to go up higher. So as opposed to taking their $20, $30 gain, the price pulled all the way back to like $89, and they weren't able to get the upside gain that they were hoping for. Right. And I don't want anyone sitting on a possible gain that they could have had and then they lose out. Yes, the RSI was on an uptrend, and are you referring to on the current time frame, or the current day, Tremaine, or back in February that we're
back in February, the next same example, how it was oversold. Like I feel you can draw a diagonal line at all the lows from there, from that last go up just a little up to that other low, before, when it was overbought.
Oh, okay.
Back in February.
Yep.
Yes, down to the lows. I feel like you can connect all those lows back to, because those are the highs. I feel like you could connect the lows. Going backwards, going back.
Oh, from back here.
Go over a little more to the right. I feel like starting at go over a little more. Yeah, starting around there and drawing a diagonal line up to when it was extremely overbought at the lows. Drawing it on the RSI, if that's possible.
So using the RSI, when it's oversold like this and it's trading below the 200 SMA, the price point can always get rejected, right? And we'll see that quite often, where if it's trading below and I'll give you a perfect example with FLGT. It it will be trading below the 200 SMA and then get rejected. That's what's happening here. It gets rejected. So yes, it was oversold here, and then it did find some support. As we see, it found support right here at this 530-ish area, and it continued to hold that support until it did cross above the 200 SMA. So if you use the hour chart to help guide you on when to get in and when these moving averages are going to cross, then it will be more helpful to recognize that it was going to go up higher. Even with the TTM squeeze, you still see that there was like red consolidation, but that red consolidation in comparison with the RSI and the MACD was showing, well, the MACD and the RSI more specifically were showing more bullish sentiment, and the red dots on this X line or X axis was showing that it was just consolidating until it did become green. And then when you saw that the X line became green, that's when it did become overbought. And that's when the moving averages did cross over. So it's like really layering it. So if I use only the RSI, it will be hard just to say, okay, well, only the RSI is showing me that it's oversold, so I should get in when it's oversold. Which, to confirm what you're saying, that is a strategy. That is a strategy. A woman that you should probably follow on Instagram. I put her name on, but that was one of her big strategies. Was like when she was going through the dips, she would say, I'll buy it when it's at its absolute low. And then when it's absolute low below the 200 SMA, she wants at least 80% of that upside, right? So she doesn't care if it crosses over the 200 SMA. She just cares if it goes up 80%. And if it misses that 20% between the stock price touching the 200 SMA and the actual, stock price itself or what have you, she doesn't care. She already got the 80% move. But you would definitely, from this 530 to 818, that's roughly $2.50. So, you could have loaded up there and this, waited. Every time it gets rejected, you're just like, okay, well, it got rejected, I'm out.
Hello, guys.
Who that fits?
Yeah, my phone was on mute all this time. I didn't realize. I've been trying to, but
Happy birthday, Fitz.
yeah, thank you guys. Yeah, thank you. I wanted to add something when he asked about the stock crossing the 5, as you had mentioned.
Yes.
That is, it has to do with if it's a long-term trade, like an option, so you're doing an option for a long time, it's best to use a longer term. The longer time period, like an hour or the day. But if you're doing a day trade, you can use the 1 minute, because when in the 1 minute, the stock cross above and under the 5. If you're using a 1 minute, you do that very quickly. But if it's a 1 hour chart, it takes longer to cross below below the 5. So it all depends on if you're trading in the day or if you're doing a week or a 1 month option. So you have to bear all of that in mind too. That's what I wanted to add.
Yeah, I agree with you, Fitz. Like, where you put your money in, you should have a plan of like, what you want to do with it, where you want it to go.
And Jermaine, you will mention about the TTM squeeze. It's a very good guide to know when to come out of the option. As long as you get in your teal bar, you just need to stay in and ride it all the way up.
Yeah, I'm mad that I didn't hold it a little bit longer. I should have held it a little bit longer.
Yeah, just ride it all the way up until the color changed to the darker blue.
I think I did the same thing with AMXT. AMXT was another spiker. Like I said, I got just would take my shares, and this one I did options with. Mainly this, what we scanned or what I showed on the scanners, you will see this. You're going to see this all the time. You're going to see that a lot of these stocks that are very low float, they're going to spike like this all the way through. Um, Even though they'll come out with earnings and people will sell before the earnings, right? That's what happened here. They sold before the earnings. Earnings came out. Earnings was okay, not great. Um, what did they do? They were estimated to get negative 58 cents uh, earnings per share, and they actually got a negative 67 cents, right? So numbers alone, that tells you that their earnings sucked. But what happens? Price action determines the movement. Volume determines the movement. So regardless of whatever the numbers that are released, you want to look at what the price action is saying. So we're here. I was already ready. I was waiting for it. Like I got into it twice. I got in on this day, and then I got out because I was thinking just like how everybody else is thinking, it's going to pull back or what have you because of earnings. Earnings held. If you were in it on a day trade, right? First let's go from the daily to the hourly. We see on the hourly. Don't forget the Wyckoff method, right? That part is important. Once this stock was trading with the 200 SMA and this kept on going higher, it went overbought, came back, but it bounced off the 20, right? Showing some relative strength. It was still overbought. Even though it was overbought, we have the MAC. This is the hour chart now. Like Fitz said, it's going to take more time for the hour chart to develop. So if you're looking to day trade or if you're looking to hold long term, think of the time frame that you're using. If you wanted the day trade, maybe use the daily chart to see if the stock is actually worthy enough for a day trade before going into the minute chart and saying, okay, well, on the minute, it shows that I have some upside for 20 minutes, an hour.
That's how it works. At least 10 minutes. 10 minutes.
Yeah.
10 to 20 minutes, no longer than that. You're gonna cross either up or below. Yeah. That's just how it works for the 1 minute. And likewise the squeeze too.
So this is intraday, right? So we're looking at the stock AMXT, which is a biotech stock. Intraday, this was last week. This was what, Monday?
AMTX or AMXT?
AMTX.
Right.
So we see every day, right? It's trading above the 200 SMA, which is good, right? Until earnings came and then it pulled back, right? So earnings came, it pulled back, and as it held at 10, right? Because we said okay, we want to wait for the market to actually open. Once it opens and it's holding, now it's 10, 1004, 1016. It's trading above the 200 SMA now by 1030. This is why I say I typically like to wait until about 1030 if I want. Like if it's at 9:45, if it doesn't hold its gains or if it's not making the type of movement that I want, I'm waiting until 1030 because something could happen with the earnings, low float, something happened, and it traded above the 200 SMA until it did pull back pre-market the next day on this Friday, but because of the long-term chart, and this is where candlesticks become very important. Until the long-term chart came across, there's this thing called a bullish engulfing candlestick pattern. And let's say that you didn't know anything about a bullish engulfing candlestick pattern. This is what it would typically look like. You will have a green candlestick engulfing a red, engulfing a green, and even the previous red. What's good, Tremaine? I'm here.
So you found this trade or this stock based off the scanner, because there's many stocks you can trade. There's money going in different directions, but you based off the scanner and you saw that it had a low float. That's what made you trade it, or is it something you already charting for?
Nope, I did not know about this stock until this week, or last week. So most of the time, we're going to go through the earnings, which we haven't touched. I don't know about anything until like I'm like, all right, either the night before, where typically you have to prepare, right? So the night before you prepare, this is preparation. So let's say, like for instance, like I showed before, we have 108 different stocks, right? I am not going through 108 different stocks at all.
Mhm.
I want to see first and foremost, one, is it trading above the 200 SMA? Two, does it have a technical pattern that is trading above the 5 EMA? And three, is it overbought? Is it overbought on the daily? Is it overbought on the hourly? Because if it's overbought on those two time frames, that means it has to pull back. And me getting into it the very next day as a primary, focus of a trade is lowering my odds, right? So yes, I I didn't know about it until like I scanned and I saw it. Just like how you see the scanner up. I don't know anything about these stocks. CLPS, excuse me. I put that up as I had it highlighted. I forgot even why. Why did I even highlight this one? But it follows pretty much my technicals, or at least the strategy. Volume 8 million, float size 19 million. That means that if it starts trading like this one, ENTX, where it has a volume of 125 million, but a share price of a share float of 21 million, it's going to go up, but it's also going to collapse. This is what short sellers are looking for. It went up 70% on the day. Actually, let's look at that, right? ENTX before we go back. ENTX, so you can get an idea, right? You see how it spiked, right? It's been consolidating with the 200 SMA the whole time. The minute when the moving averages converge with the 200 SMA, that makes it even more significant. Because once this happens here, and granted, you probably would not have known, I would not have known that it was going to do any of this. But on this day, when you have this gapper like this, then you should probably keep it on watch, because there's a reason why it gapped up like this. Even though it's coming out with earnings on the 18th, which is 4 days from now, there's a reason why it gapped up from $1.50 to $10.16 in the matter of 3 days. And that's
Some
because
institution
volume
jumped in.
increased so much and inflated the price.
So what website is that scanner on that you were mentioning? You said TD Ameritrade?
So this platform is Thinkorswim.
Oh,
Um,
Thinkorswim.
yeah, this is the Thinkorswim platform that is provided by you know TD Ameritrade. But
Do
if
you
you don't have this, and let's say that you're using Robinhood, um, I'm on my website. I'm on this website now, Finviz,
you
right?
you trade on Thinkorswim?
Correct, correct.
Okay.
I trade on Thinkorswim. I prefer Thinkorswim just because it has like a lot of educational tools too. So you can replay, and I tried doing this in the previous weeks where we replay price action of previous stocks, but for some odd reason, Thinkorswim loads up everything on Sundays. So it's been kind of hard. Like even my entry and exit points weren't showing in the previous weeks. So that was like getting frustrating. But let's say that you are, as I'm trying to wait for this to, oh, come on. I'm waiting for this pop up to go away.
Are you familiar with TradingView?
Yes. I don't use it, but I know that there are people that do use it.
Yeah, that's what I was doing my technical analysis on. Does that have anything similar to that scanner?
You can use that
So
screening,
I
that
think so.
scanner strategy on anything, literally on any website that scans. If you have a website that scans, you're good. If you don't have a
Okay.
website that scans, and you're only using Robinhood that doesn't scan, then you're just going to be following what people are tweeting or just randomly sharing on Reddit, right? So you want to kind of be ahead of the herd when the stock is kind of getting ready to move on that 5% move.
What platform does he use?
Tremaine,
Oh, say it again.
what
I
platform
was
do you use?
asking what. Mhm.
I use Robinhood. I use this app called Doe. I'm not sure you're familiar with that. And I just started using Webull a little bit.
Yeah, but Webull is very good. That's
Yeah,
what
Webull is really good.
Webull is almost similar to this one.
Okay, yeah, I haven't dove into too much. The reason I was using Doe because they had unlimited day trading, and that was something I was trying to get into, being able to do that. Because on Robinhood, you have to have an account of at least $25,000 a day trade unlimited.
Webull give you
So,
unlimited? Really? With a small account?
wow, that's dangerous. Wait, what's the website name?
Oh, which website?
Go.
Oh yeah, Doe. Yeah, that allows me to day trade, unlimited day trades.
Where how do you spell it? I'm sorry.
DOUGH.
DOUGH.
That's
Yes,
the
sir.
trading platform.
Oh,
Yes.
I thought it said was Webull.
No, I have three of them that I use: Webull, Doe, and Robinhood. But this is the one that allows me unlimited day trading.
wow.
With a small account.
Yeah, with a smaller any amount.
Wow.
Yeah.
I need to check them out because Thinkorswim only allow you to do five within 3 weeks. I mean 3 within 5 days.
Yeah. I don't know
And
how
if
that. I don't know how that
and
works.
and E-Trade is the same thing.
Yeah, I can't. I got banned from Robinhood for day trading.
Yeah, because sometimes you end up buy a stock and it's going up and you watch it go right down and you can't sell it because if you sell it, you're gonna get in trouble.
Right, because like nothing goes up all day, and I want to close out
Yeah.
at certain place. Yeah,
You can't
I got
do that.
So there's a way around, and Keisha, I'm gonna get to your question. There's a way around that day trading, right? Where you can buy at 3:30 into the next day, and that saves you a day trade. So if you feel like a stock is going to go up the next day, you can buy it at before the market close, and then write it up the next day for the market open, or even in the pre-market. You can sell it in the pre-market before it tanks, because typically what happens is that if the stock continues to move strongly from the after hours into the morning pre-market hours, when the market opens, I'm not saying this happens 100% of the time, but when the market opens, it tends to pull back, and it tends to pull back around 7 a.m., maybe 7:30. So that can save you a day trade while at the same time still earning on the trade that you made. And Keisha, yes, I do trade on E-Trade. I don't use it as often because I do not like its platform at all. But if you have E-Trade Pro, I hear that that's a lot better for some people. But I'm not a big fan of E-Trade. But I know that it does have its use. I know that it can be really, really good.
I have E-Trade Pro, but I don't never use it to trade. I use the Power E-Trade, that's the option platform. But it is limited too because it is limited. Not it doesn't give you all the information like Thinkorswim. You can only use whatever they put there. You can't do anything to it. So it limits you in a sense. And sometimes sometimes the problem with it is that you're not seeing the right price. All of a sudden you might enter into a stock where the price is completely different. So I have to always make sure that I'm looking on Thinkorswim to make sure that the price is right. And I spoke to them about it over and over, and it doesn't make no difference. And when you call them, they don't even, and it takes 45 minutes for somebody to answer you.
Yeah, this scanner is different. I never seen anything like that, and I feel like so. What made it put these 108 stocks together? Like, why did it populate those?
It populated from this, from pretty much these strategies, right? So all these spikers, and we're gonna go. We can click through because I don't want to go through all 108, but it's relatively quick now for me. But this is what essentially a lot of the day traders look for. They look for these spikers between these ranges, right? I have 5% as a start, but we can put it at 4% or 3%. But and I have it exponential because maybe a stock might go 1,000% on the day, and maybe I want to short it and want to see it fall to its death, right? and so and between a certain price point, so I these strategies are, I would say, is like really, really simple if you think about it on the grand scheme of things. Like, okay, well, if I know this amount of shares is available in the market, right? Um, and it's not a whole lot, and people are going to want to run in and jump in, it can really inflate the price, like it did with ENTX. This is a prime example. Um, so let's hold it. Let's dive into some of that scanner, some of those stocks that we did scan, just so you can see, like, okay, when I'm going through the day, like I have 2 Friday scans. I probably did this at like 11:30, maybe 12, just to see what was running. But I didn't do one at the end of the day because I typically like to keep my Fridays a little bit open. But on Friday, when I was, for today, we see what happened on Friday. I click on LRDC, right? It's overbought right now. I don't want any parts of it. It's already overbought. It's going to come down. I don't want to look at that. And this is like, me on the day. If it's looking like this where it's flat, I don't want any parts of it. I don't know what is this. It's a beaten down stock, right? Anything can happen to it. I would have to be holding and hoping. This is overbought. Anytime it goes overbought, I'm looking at it. I'm like, okay, it's overbought. That's too much. I don't want to deal with it. I want something that has some room to run. Now, SEEL, this has been coming up uh, quite a, I won't say quite a lot, but it has been on some people's scanners as well, just because of their earnings that they did on Friday. Um, this would be something that I would still not buy, but I would just wait because it does have this whole technical behind it where it broke the previous high, right? Remember what we said, right? Higher highs. So before this day happened, it had a higher high. The previous high was here. It made a higher high, pulled back, higher low. The previous low was here. So now it broke out and it broke past this 430 price point to go a little bit higher. It's overbought. I don't know if I want to risk it, but it still has some consolidation behind it. So this would be something I'd be like, you know what? I would watch it. So I would highlight it, right? EYES, same thing I did during the week. I wanted to trade it, but it was so overbought that I was like, I can't do this. However, technically, this looks like it can still break out because it's trading above the 5 EMA. It crossed above its previous resistance, and it wants to test its next resistance. In the WhatsApp group, I mentioned it around 2:30 because at around 2:30 is typically when I start really scanning for the stocks that moved on that day, because that's when you start doing your research around 2:30. You say, okay, let me start doing research now and see what happens. So at 1 p.m., it was holding its gains because look, it made a strong green candlestick at the beginning of the day. It's been trading sideways, holding support, and it just continued to trade above the 5 EMA. Around this 2 p.m. time, I remember mentioning, I said, if you are thinking about trading EYES, please have a game plan because you could have got in at about $12.30 and wrote it into the close for about $3 a share. $3 a share might not mean much to some people, but $3 a share is good. That's a good day. That's a good day. You make 5% on the day. The goal of trading is to make at least 1% a day. You make 1% of your money a day throughout the year. You just made out of 250 trading days, you just made 250% on the year. You did exponentially better than the S&P, exponentially better than the Dow. So you make $3 a share on this one trade. That's at least 10% lowballing, right? It went 35% on the day. So that's why, that's why I go to the hour chart. Even on a day trade, I'll go to an hour chart to see where it is in relation to the moving averages, so that if it does go higher and it's trading above the 5 EMA, at least I have something on my side. It's overbought now, well, kind of, but it still has some upside. It could possibly go to this $18 area on Monday pre-market at 4 a.m. in the morning because everyone on Webull likes to trade at 4 a.m. in the morning for some odd reason. Um, so that's EYES. You keep on going through the scanner. You know, like I said before, OTC stocks, you'll have these OTC stocks that will run from 4 cents to 50 cents, right? I didn't put my scanner at 8 cents or even 5 cents, but if I put it at 5 cents a share, maybe this would have popped up, and then I could have got 5 cents and ran it up, 45 cents a share for these upcoming days. AMTX was on there, AGS, another one, breaking previous support. That'd be something that I would watch. Maybe more watch and see if it does do any pullback because it is overbought, but all the other technicals are behind it, and then the implied volatility is relatively low. Trading with the historical, so maybe I would buy options, maybe I wouldn't, but it's slightly overbought, so I would have some type of reservation with it. Clips, CLPS. So there was a reason why I did highlight it. So it's doing kind of what AG, I think, no, SEEL, was it SEE? Yeah, it's kind of doing what SEEL did on Thursday before it made that spike on Friday, right? And you will see these charts run, the pattern is the same. You don't want to complicate it. I know that there's all these bigger stocks and, people are looking to trade Amgen and Tesla and all these like really bigger names. Zoom, I get it, the name, I understand, but when you have a pattern that runs the same way each and every time, all the time, just be consistent with it, you know. Um, so this one is consolidating. It's consolidating with buying, right? So this is a good example of what happens with consolidation when the x-axis is green. It's not overbought. The MACD wants to cross, right? Happened after earnings, right? We don't even know the numbers. I don't know the numbers, right? I haven't looked behind the numbers, what happened back here on March 5th. But it's holding support at 393, roughly. The TTM squeeze, once these histograms get smaller, yellow, smaller, yellow, smaller, yellow, like it did back here in November, once the histograms continue to get smaller and smaller, and this x-axis continues to stay green, it's going to have some upside, but there's going to be some resistance, right, on that upside. So that would be something like, you know what, maybe I'll watch, and then maybe I'll have to like investigate behind the scenes on the statistical numbers on why it is fighting, why it has been fighting so much. Why did it spike and then pull back so heavy, right? What happened here on this day? It was trading 127 million shares on this day, right? We said that it only had 19 million shares. 19 million shares available on this float. So that's why, knowing the float size, which I did not show you, I'm so sorry about that. Let me show you on the FinViz website. If you're looking to investigate any stock, any stock, it doesn't matter what the name, what the size, whatever it is, you want to, okay. Sorry. You want to be able to go to its actual statistics page. And Yahoo has one, FinViz has one. I'm going to share this page. So when we look at stupid pop-ups, that's the only thing about some of these pages. They have pop-ups that you have to ignore. So we're here on FinViz. And on FinViz, we see that CLPS, it tells you not only the sector that it's in, which is technology, and we know that everyone has been hating on the technology sector for the past couple of weeks. But that could be also a part of why it is come or it had came down. It's part of the information technology industry, and it's out of Hong Kong, China. When we're looking at the actual statistics, the numbers that matter, right? We're looking at what the share float is. Right here it says 4 million. So we know it's already a low float. Even though on my Thinkorswim it says, what did it say, 19 million? Even though it said 19 million, yeah. Every once in a while you'll get an indiscrepancy like this, but at the same time, you know it's a low float. Maybe you have to check another website just to verify. Maybe you have to go to NASDAQ.com or even Bloomberg.com just to see like what numbers they might have, because they might be doing some fluctuation in the background with the float size. But at the end of the day, at least you know what the relative float size. It's low, extremely low. And then the short float, meaning that how many people are betting against the stock, is less than 1%, right? So those who are betting against the stock is less than 1% of this 4 million. That's what, 1% of 4 million. I'm bad at math. 1% of 4 million is like what, maybe 10,000 shares at that. So if it's like 10,000 shares betting against the stock, all those people are going to have to cover. They're going to have to cover their short. When you're short selling, you are borrowing against your broker. So when you're borrowing against your broker, of course you have a fee, for borrowing and all that stuff. But when you are being squeezed out, which is what happened on that day that it traded, 127 million shares, when you're getting squeezed out, this is all the short sellers covering their position. So it can only go higher and higher and higher, as opposed to lower and lower and lower. And then also here on FinViz, you can, you see the news of what's going on. Actually, another good thing is that you see the average volume. On average, it trades 3 million. But on the day, it traded almost 3 times its float. Well, 2.5 times its float, 2.5 times its volume. So because it traded 2.5 times its volume, that means it's, that's another key indicator. When you have more of a volume in a stock, the sentiment is saying that everyone's running to this stock and it could push higher, right? So they must have said something in this letter to the company shareholders, which is even, gravitated more people to it. And then you have some people that will say some stuff on the side, which is always good. But this is where you want to really understand, like, what is the company? Like, what do? They consult and they do some solution services to institutions operating in banking, insurance, and financial sectors. We know that people are looking now to even invest more into banking, right? They're starting to look outside of Apple a little bit more, and they're looking at more of these fintechs and seeing what fintech can do. JP Morgan is kind of worried of the direction that fintech is going because he doesn't know how it's going to affect his business, even though he believes that his business will be stronger, throughout this whole time, which is true. JP Morgan is a strong old bank, but fintech is coming through. So this is probably another reason why people are interested in this fintech company. So I don't know, maybe that kind of helps there. So I know that we like I said, we can keep on going through the scan, but I want to make sure that we hit up some of these earnings that's supposed to, like, even Jill's supposed to come out with earnings, right? Who knows how good their earnings are going to be on Tuesday morning when the pre-market opens. But because they're coming out with earnings, maybe it goes up higher, right? But it is trading above the 200 SMA. And mind you, I'm just looking at it now for the first time. I have no idea. But I will have to go through the background like I just showed you with FinViz and maybe even go to Twitter and see if people are actually interested in Jill. Does it have a good volume size and stuff like that? You see Express. Like I said, I got into Express because it fits my pattern. I feel that it's going to break out. So I think that it's not overbought. Even if it doesn't go like extremely green tomorrow, as long as it trades above the 5 EMA, I'm fine. Once it starts trading below the 5 EMA on the daily chart, right? I'm using the daily chart to make this assessment, not the hour or the minute. I say on the daily chart, if it breaks out and it starts testing this $5 area, then it can possibly go higher towards 570 to this previous high, or 550, I should say, right? So I'm looking at Express to do something. It is a relatively low float at 64 million. And it trades 24 million on the day. So this one I'm currently in. I'm currently holding that. Does anyone have any questions?
I was saying that it is one of the main stocks.
Express, right?
Yeah.
Yeah. It is one of those meme stocks. It's just like AMC, Bed Bath and Beyond, Overstock, BlackBerry. I feel like there's another one.
Yeah. Friday I catch these little ones. SEAL, SEEL. SEEL.
SBEL.
No, SEEL. It went up. So I catch it almost at the top and jump in and jump right out.
Oh, how did it go? I'm sorry.
EEL.
B as in boy.
No, E
E as in
as in
Edward.
Harold. Yeah,
LL.
EEL. SEEL.
Yeah. So you did get into this one.
Yeah, I got in early and ride it right to the top and just ride out.
See? There it is. Can't go any better than that. Like I was working on this day, so I didn't even I was inspecting the restaurant, I should say. So I wasn't even able to even look at this. But it was, wasn't overbought before, when you got in, more than likely.
Yeah, I'm looking at everything. If you look on the daily, you can see how it look good on the daily.
And even on the hourly, that Thursday, it came out with earnings.
Yeah.
Came out with earnings. So earnings was definitely the catalyst that helped move this.
A lot of short was in the way, so it had to fight them to go up there.
And the move continued until about 12. Well, really until 1. It pulled back at 1.
Yeah.
But this is what I was saying. Like, if you're looking at getting into a stock, you want to have a stock that has that upside potential, at least until lunch. Right? You're going to get a pullback at 10. This is typical. That pullback at 10 is when you start looking to, like, is it holding above the 5 EMA, the hour chart? And where is it on the minute chart, on the intraday chart? So on the intraday chart, it's showing that that it did pull back, right? Obviously, it pulled up, tested the previous high on the day at 435, well, pulled back, but it held support at $4. Once it held support and you use the MACD and the RSI and the TTM squeeze, maybe you don't buy the option contract because the implied volatility is extremely too high. You're paying a higher price for the contract than the person who bought. Well, no, even if the person bought back here, with the option contract is still high. No, essentially, you don't want to buy an option contract when that implied volatility is so high.
Yes, I
Maybe
bought
just buy the shares.
I bought the shares instead.
Yeah, see, there you go. But even here, you'll see that there is a break intraday. All right, we look at the stock intraday, and we see, okay, because this is good, right? I like this. This goes with what Tremaine was asking before, like when will I actually buy, right? So we see that it pulled back when the market opened, right? What did I say? Once it starts making it, when the market is moving in the pre-market, when the market opens, it's going to pull back. It's pulling back towards the 200 SMA, holds that price. Even though the MACD is below the 0 line or the x-axis, it still has an opportunity to bounce, right? The market just opened. Just wait. It's oversold, but it bounced. It didn't cross below the 200 SMA. If it crossed below the 200 SMA, during this time, then it's probably dead in the water. You don't want it because now it's below the 200 SMA and it's probably going to continue to go lower. But it held the 200 SMA. So because it did that, now it's like, okay, what else can you do? All right, so you're testing previous resistance because the previous resistance in the pre-market was 440. People don't look at the pre-market in the after hours time. That's why I harp on holding that hour chart because it gives you an idea of what it did during the closed market. So once it spiked and couldn't break that resistance, it did pull back. And it pulled back, held support, didn't come back to the 200 SMA. Yeah, the MACD crossed, but it didn't go below the x-axis. Yeah, the RSI did come back to some type of support, but it didn't go overbought. The TTM squeeze, the x-axis maintained its green, right? So this is showing that even though there's consolidation on the RSI showing that it's buying consolidation. So whatever happens during these little histograms when they're red, they're small. And those small red histograms are becoming small yellow histograms, which ends up coming back to the x-axis and turn into these teal histograms, which, as you can tell, the RSI is still not overbought. MACD started to cross up a little bit higher. Yes, it found more resistance at that 440-ish price point, but as it started to pull back, it was making higher lows. So it was holding.
Look at the option on the next 5 days. They have a 19,000 volume for open interest of 664. Somebody bet that it's gonna be $5.
The option, which option contract?
The one for March 21st.
For March 21st?
Yeah, that's an unusual option.
Oh, yeah, the volume is, wow. Yes, so what Fitz is referring to is like the unusual options volume, where you will have a volume that's more than the actual open interest. So that open interest, which you don't see on Robinhood at all. Robinhood doesn't give you all of this, right? When you start to see that the volume is much more than the open interest, more than likely the price is going to go up higher, right? They're all calling a strike price of $5. They're saying that they believe that this stock can have that it can go to at least $5. It can trade in the money, $5 and higher, right?
There's a whole lot of money to lose there.
There's a whole lot of money to lose there. Yeah, I
don't think somebody will do that.
The volume is nice, but like I said, I would have to really like look into the news and see, why they suggest $5. And, it's trading and is testing the previous resistance. So maybe it could.
Yeah, you get an upgrade. You get an upgrade for $14.
Oh, it did get an
Friday.
upgrade.
Yeah, you got an upgrade.
Oops. 1, 2, 4.
$14
Yep.
Target price.
That's why.
It went up. I think it went above the $5 Friday, and it went above $5.
On Friday it went up to $5.
Yeah, it went above and came back. And it started to consolidate and squeeze again. It have a squeeze on the hourly chart. These are oversold, and the momentum is above the zero line, so it's still looking good.
I agree. Like, it still has that breakout, that breakout. This is, if you take anything from anything that I've said, if you ever look at a chart and you see like a stock that is retesting its previous highs with green candlesticks approaching it, more than likely there's an opportunity that's going to break out. This looks like it wants to break out. Like it doesn't want to go higher, especially with the news that Fitz just mentioned.
Look at that MACD there. Wow.
Yeah, the MACD has a lot of upside. The only thing that scares me is that RSI. I get scared when I see that.
Yeah, but $2 more is not anything, to go up. And the squeeze is a lot of buyers coming in right there.
Right. Correct. There's a
Yeah,
lot of squeezing happening here.
the
A lot
squeeze,
of
a lot of buyer coming in there.
And this was a float of how much again? 73 million. It traded 310 million shares. Like
Mhm.
the shares exchanged 310 million times on the day, uh, which is pretty wild in itself. Uh, so you know that is the strength of what volume can do with a float size. Um, since we didn't really go over much earnings, let's go over. I know VUZI has earnings tomorrow morning or after hours. So VUZI has earnings after hours. So since is anyone in this position actually?
No.
All right, so this is one that I was liking before. I was waiting for it to do something, thinking they have these cool ass glasses. These glasses are X-ray glasses that they use for surgery on the knee, and they're trying to use it for more capable purposes. Of course, for augmented reality and things like that. So I bought a contract before this spike. Before this spike, I think I got out on this spike. I'll have to look at the contract itself. But now it's starting to retest this previous high. Um, so if I had a game strategy, because I've traded this before, so I actually have some type of awareness of it. Um, it's still consolidating, right? We see that on the TTM squeeze, well, order of operations, right? So
Mhm.
the 5 EMA is trading above the 5 EMA, it's trading above the 20 SMA, bullish confirmation with the 200 SMA. The MACD is about to cross. It should cross when the morning opens. The RSI is not overbought,
And it's
and then
squeezing.
the squeeze is coming to this zero line.
Yeah. Yeah, it's squeezing and it's squeezing now. So price
Correct.
gonna go break the all. If we have a good day tomorrow, it might break the all-time high.
Correct. You can see the squeeze, like it squeezed back here, right?
Yeah.
Where it was like, oh, okay, well, we're red. And, the histogram went red, whether it went yellow, and then the zero line went red, but it ended up being green because it started to squeeze on the upside. Wouldn't be surprised if this squeeze on the upside. And then, if I wanted to buy an option contract, this I would probably buy an option contract because the historical volatility is much higher than the actual implied volatility. This is what you want. You want this, right? So if we start boiling it down, say, okay, well, let's look at it on the hour chart. What does it look like? Well, one, after it made its new high, which is something that you should always take into account. Once it makes its new high, you should look to see if it's going to pull back on that time frame, because on the time frame, more than likely, it will pull back once it makes a new high, and that's even harder to gauge sometimes. But once you start seeing it makes its new high, especially around that 10 a.m. time, and it starts trading below the 5 EMA with red candlesticks, this was showing that, okay, well, it's showing some weakness. It's overbought. RSI, the MACD is also showing the same bearish downtrend. It's going to trade below the 200 SMA, right? So think Wyckoff method. If you sold up here, you're waiting for it to cross to be below the 200 SMA. You're just waiting for it to consolidate, right? Maybe you buy at this supported price around $15 a share, and then wait for the moving averages to converge. So you do have this spike, because that's what happened here. The moving averages came together and they spiked. So if you bought in at $18 a share, you had nothing but upside for $3. You could have sold prior to the market closing, right? Maybe at $22 a share. Um, but right now it's overbought. So what I typically want to gauge myself when a stock is overbought is by saying that, okay, it's overbought now. The potential of it pulling back to the 200 SMA or to the 20 SMA is there. So, all right, a price of maybe $20 because that's the 20 SMA price on the hour. It could test $20, right? So now I'm thinking downside risk, $20 a share. Is there support near there? Yes. Right around here, it happened. There's $20 roughly. Right around here, it kind of broke that $20 to go up higher to $26 for its all-time high. And then it also held support back here, back here, back here, right around $20. So, okay, roughly $20 downside risk. We anticipate that it can come to $20. So now we go to the intraday chart and we see, well, where is it trading on the intraday? You know, did it come anytime below the 200 SMA? Well, it did during the closed market session, where when it came down below the 200 SMA, it actually went back higher. So now I'm still anticipating it to trade because it made its all-time high now on the minute chart, that it's going to come below the 200 SMA on that same time frame. So yes, it will test the $21.40. Does it hold $21.40 on the minute chart? Maybe it does, maybe it doesn't. But I already know in my mind, I have $20 as my downside risk. So if I'm looking to buy this at $21, just know that I have a whole $1.40 of downside risk that I'm willing to risk, essentially, right? So I want to see it come down, even though the TTM squeeze is squeezing and it's not overbought. MACD is still showing, you know, some upside. I don't know what can happen during these closed market hours. Maybe it spikes up even more at 4 a.m. because of Webull traders. And then when the market opens, it tanks, right? So that's why I use that hour time frame to give me an idea to assess where that price point can go. If it can go or pull back to, I should say, to the 20 SMA, then I want to use the 20 SMA price as my downside risk. But if the stock continues to trade below the 5 EMA and trades below the 20 SMA, best believe it's going to test the 200 SMA. And with all this overbought right now that it is on the hour chart, it has more downside. So then it could potentially trade to its previous support, which I don't believe it's going to do. But that's just the mindset that I typically have with every stock that I enter. Once it starts testing the other moving averages, just know that the red, and that's why I have it red, because I'm like, okay, if you're still in it, you need to stop. Green means go up higher. Red means stop, right? So that red is telling me, okay, this, you probably should have gotten out. And, you know, maybe you want to rethink your strategy or your approach to this stock, because they all have different behaviors. They all think differently. They all move differently. But the chart pattern still tells you the same thing at the end of the day. This will break out. It's just when you want to get in. You know, on the year chart, the moving averages are close. It's trading above the 5 EMA. Right? But the previous green candlestick was around 1950, right? That's where the previous resistance was around $20 a share. That's what we said. Hey, downside risk. The hour chart, simple moving, 20-day simple moving average, already told us $20 is a relatively good price. That's where the previous support is. Supply and demand, right? So this is what we want to look for if we were to get into VUZI prior to their earnings, which I would never ever recommend buying a stock prior to earnings, because you never know what could happen, right? AMXT did that. AMXT was a prime example, right? Where we see it on the hour chart that it did pull back when earnings came out. It came out with earnings, pulled back. Did you want to be in it before earnings? Well, when the earnings released? No. Do you want to be in it when the earnings call came out? No, because it still has some time to pull back. But after all of that, after it was said and done and it held support at $15, It went higher. So, you know, so that's why the moving averages are there. And it's not more, it's more of a help to assess the price as opposed to accuracy. Like, oh, this is the science behind it. This is tech, it's going to be at this price no matter what. No, it's just there as a gauge. So you can understand what price you're getting in at. So you're not buying at the top, right? There, I guarantee there's a lot of people that bought up here. And they might be mad when the market opens tomorrow. Same thing with VUZI, right? I can imagine people are looking and they're like, okay, well, I bought up here already, you know, into the close, and it's finding resistance. And why is it finding resistance? Because its previous resistance was at 2250, right? And we see it from back here, right? And it broke 2250 to go up higher, right, to 2608. So that's why, you know, knowing where your support and resistance prices is just as important as knowing, you know, where you want to buy in and where you want to sell. So, like I said, if this were to pull back to $20, I know that I would want to sell near the previous high, which is at $26. And, you know, since that's the all-time high, maybe it breaks it to make a newer all-time high, which it looks like it wants to do. Looks like it wants to do all of that. It wants, you know, so this will be definitely one to watch when the market opens in the morning until it closes on Monday, because that's when they come out with earnings. Does anyone have any other questions? Oops, that's not what. Does anyone have any questions about anything I've just mentioned, anything I've said?